Welcome to the Efficient Private Clients Update. I'm joined today by Etienne Viljoen, the Chief Investment Officer at Efficient Private Clients. Etienne, thank you for joining us.
Thank you.
Let's start things off with a significant portion of global markets, the US. They recently had elections over the last quarter. How did this affect global markets?
Well, uncertainty supported the US dollar, and the US dollar strengthened quite a bit. Equity markets rallied, especially led by tech and communication stocks. Inflation fears re-emerged as Trump threatened with tariffs, and a strong jobs report in December also supported that theory. Bond volatility increased as the expectations for the rate cuts during 2025 were lowered quite substantially.
Yes.
And in turn, that had a very negative impact on global real estate prices.
Okay, and what were the broader effects for the rest of the markets?
Yeah, Europe and, Europe itself had its own problems. Germany and France had political instability and narrowly avoided recessions, which made their markets moving sideways and really going nowhere at the moment.
Yes.
In Japan, the Nikkei, especially export companies, did very well on the weakening yen. And emerging markets and SA specifically struggled with the stronger dollar and the looming tariffs on China.
Okay, and if we look at the AI market, we've seen some recent downturns. Can we say that US equity valuations will remain sustainable for 2025?
Yeah, well, look, uncertainty is certain with Trump in power, with the leadership changes. Definitely, US equities have been priced for very optimistic events. And this S&P 500 is really, overvalued as an index. If you look at the top 10 stocks, the mega caps comprising a third of that, that's mainly where the overvaluation lies.
Yes.
And definitely in the other 2/3, there's good companies, good well-run companies at decent valuations to be bought. So I'm not saying there's no opportunities in US equities. I think one should be very careful on that mega cap stocks. As we've seen now recently in this week with the news about DeepSeek,
yes.
I think fundamentally probably not that much or that significant, but big sell-offs in the likes of Nvidia and Broadcom just shows that investors are aware that valuations are stretched.
Definitely. What about the Chinese markets? Do we see more opportunities there, or is it possibly in a bit of an investment trap?
Yeah, the broader market expect 4.5% GDP growth in China, which is down from the 5% we've seen in 2024. Still quite good in a low growth environment globally, more than double what you expect in most other places. I think there's three big concerns, and that is the real estate market, the looming tariffs, and the sluggish consumer. Now, the real estate market definitely is bottoming out, and by the looks of it, during the second half of this year, it can start turning. Fiscal stimulus definitely on the cards. We'll have to see if that can get the consumer spending. And then tariffs. I think on the tariff side, almost worst case have been priced in. Hopefully it's a situation of sell the rumor and buy the fact. When the fact comes, the fact is a bit less severe than expected. There's still very, very good companies in China at fractions of the valuations of US that I think can play a significant part in a well-diversified portfolio during 2025.
Okay, and then if we have a look at the latest developments for South Africa and the rest of the emerging markets?
Yeah, the strong dollar and weak commodities prices put emerging markets under pressure. That should remain until we see some relief on the dollar. Previously, Trump said he's not a fan of a too strong dollar. He wants the US to be competitive. So hopefully he intervenes and the dollar starts weakening. Then it can bode well for emerging markets. Locally in SA, we expect in excess of 2% GDP, so that's quite a positive after the previous decade. And definitely, if the GNU remains intact in some sort of way, that can be very good. Last year, we haven't seen major inflows from foreigners. We saw the outflows stopping and modest inflows. I think everyone took a wait-and-see approach, but hopefully during this year, if stability remains, we can see more foreign inflows, and that should bode well for SA income mining stocks.
Okay, and then everybody's favorite question, what kind of outlook can we possibly see for the Rand?
Yeah, definitely volatility. I think when it goes towards the 19 Rand level, one should see some support. Most Regulation 28 investors and funds are then over their 45% limit and needs to bring funds back. With current commodities prices below 17 is probably unlikely. If the dollar starts to weaken a bit and we see improvement in platinum and copper prices, etc., then definitely in the longer term the Rand can move closer towards 15 Rand to the dollar.
Okay, and you mentioned the significance of commodities. What kind of trends could we see in that space?
Locally wise, platinum always important. The lackluster uptake of electric vehicles definitely increased the demand for platinum. The platinum market is now in deficit, about 6.5% of demand. About 30% of platinum producers are cash negative, so that's an unsustainable situation where we should see improvements in the platinum price in the next 12 to 18 months. Gold, surprisingly weak after the election, taking into account all the uncertainty, probably the weak dollar. In the longer term, we still expect central banks to continue buying gold to hedge their foreign reserves from the US dollar. And then oil, definitely the oil price showed some weakness after the election. Last time around, Trump warned OPEC and individual OPEC countries with sanctions if they cut production too much and try and get prices higher. And then, I mean, he promised to drill a lot and try and become the biggest oil producer in the world. So I think definitely oil will be under pressure, and that's definitely one positive factor for worldwide economic growth.
Thanks, Etienne. That's all from us today. Until next time, thank you.